welcome to Macros with Mythili, the ET Now show that takes a hard look at all the major macroeconomic issues and developments in India and overseas. This week we're going to take a hard look at an issue that had been relegated to the back burner for over a decade but now has resurfaced: strategic disinvestment. After a hiatus of 12 years, late September, the Cabinet Committee on Economic Affairs has approved the first ever privatization of a central PSU, the Allahabad-based Bharat Pumps and Compressors. With this, the stage is once again set for strategic disinvestment, a policy that was pursued quite aggressively by the NDA government with UD Chaubey as disinvestment minister, only to go into hibernation than the two UPA governments that followed. The driver this time round is a Niti Aayog report recommending potential candidates for strategic disinvestment. The Department of Disinvestment and Public Asset Management (DIPAM) website describes strategic disinvestment as a sale of a substantial portion of government shareholding in a central public sector enterprise (CPSE) of up to 50% or such higher percentage as a competent authority may determine, along with transfer of management control. So, with the government committed to collect 56,500 crore through disinvestment in PSUs this fiscal, of which 20,500 crore is to come from strategic sale in both profit and loss-making companies, we are going to take a hard look at the issues and challenges ahead. And joining me in this discussion are Dr. UD Chaubey, Chairman SCOPE, Standing Committee on Public Sector Enterprises and former Chairman and MD GAIL, and Mani Palvesan, MD SBI CAP Securities. Welcome to the show, Dr. Chaubey, Mani.
Thank you.
Let me start by asking you a very basic question. Why is it that more than 25 years after the reform process started, strategic disinvestment is still seen as a hot potato? The last strategic disinvestment was done more than 12 years ago, despite the fact that there is now broad agreement that government should not really be in the business of running hotels, manufacturing scooters and so on. So, let me start with you, Dr. Chaubey. You have been Chairman GAIL, and while oil and gas might be a different kettle of fish, surely the government has better things to do than be in the business of running airlines, manufacturing pumps, to mention just some of the activities that the government is presently into. Dr. Chaubey?
Yeah, I think I must give some background before I really comment on the question directly. As you may be knowing that SCOPE is an apex body to pursue excellence in public sector enterprises, and there are 298 public sector enterprises in India. The investment by Government of India is around 10.9 lakh crores on these public sector enterprises, but in return the net worth of public sector enterprises are somewhere 9.9 lakhs crores. And in terms of the profit, net profit, they have been giving over 1.1 or 1.2 lakhs crores every year, apart from payment of taxes, duty, direct or indirect tax, which is of the order of 1.6 lakhs crores. And to my understanding, this is about 17–18% of the total revenue collected by Government of India from the company side. Now, this is one side of the story. Coming to the last 10 years record, you will be surprised to know that in the last 10 years, the total gross profit in the last 10 years have been of the order of around 27 lakhs crores, and payment of direct and indirect taxes is around 13.5 lakhs crores. So, net profit in the last 10 years contributed by central public sector enterprises is over 13 lakhs crores. This has not been a small achievement. Now, coming to the disinvestment, which is your question today, yes, it is true that 1991 policy, industrial policy of the Government of India had envisaged consolidation of fiscal holding by Government of India to strengthen the economy. Now, the question is, what are the ways to strengthen the economy of the Government of India? The government thinking that yes, we can disinvest part of the asset of the Government of India even after keeping overall 51% control by the government, so that it continue to remain as public sector. Yes, it is true. But if you really go a thorough research side, you will find that how much you can fetch out of disinvestment of the central public sector enterprises. If you dilute total 49% of the through this investment, you are fetching 2,78,000 crores of rupees. This 2,78,000 will definitely meet the fiscal deficit or whatever is there. There is no doubt on that. But at the same time, you are going to lose something also. You are going to lose your net profit by 50%. Instead of 1,13,000 crores of profit which you are getting as a net profit every year will come down to 50,000 crores because you have diluted your part, government part. At the same time, you will lose your dividend also to the extent of 18,000 crores of dividend Government of India will lose. So 50,000 plus 18,000 revenue you are losing, and in turn you are collecting around say 2.78 lakhs of rupees through dilution up to 49%. Every year you are keeping 59,000 or something like that, which you are not meeting. That is a different question. But unfortunately, I will tell that the political economy only look for short-term gains. If there is a need of vision, strategy, you will go for long-term return.
Let me just toss a question over to Mani, because we really don't have time to get into a full discussion, sir. But Mani, as part of the merchant banking fraternity, I know you're more concerned with the mechanics of the strategic sale. But just as an informed citizen, would you agree with Dr. Chaubey? He gave some numbers, of course. But should the government be in the business whatsoever of manufacturing? That was really my fundamental point. Mani?
Yeah. So I think to answer that question, this divestment, or especially strategic sale divestment, which also involves, say, giving away part of the management control, or rather the management control to somebody else, is one of the boldest form of reforms. And this reform, because the opposition can always come back and say that there was some cronyism or some favoritism, there was a sell-off. So it's always a very difficult part of the job for any government to do. So it requires what one will call as a lot of political will. Now this government, which is basically a lot of a very reform focused government, I feel it has that willpower to actually push through the process. And the way they have been proceeding with the selection of the PSUs, identification of target companies which can be given in the strategic divestment space, I think the political will and the decision to go ahead with the decision is taken. Now ahead of that, we only have to see how the process goes, how difficult it is. See, it's going to be a very lengthy process, because it's both from the buyer side and from the seller side. From the seller side, see, the government has to set up a very transparent mechanism for the bidding process. It has to see that it is not biased in any way. It has to see the evaluations. It has to set timelines. And if you see from this buyer side, they have to go through the entire gamut of the operations of the company.
Sure. So we'll go into the details of the valuation and the other problems a little later. But Dr. Chaubey, I know you gave a very convincing definition of, defense really of the PSUs. But given that the government has accepted that this is going to be the policy, we really do not know on what basis the Niti Aayog has identified the units for strategic disinvestment. So reportedly, they've taken up primarily recommended sick PSUs, loss-making PSUs. But if you were to put yourself in the shoes of Niti Aayog, on what basis would you identify? We're not disputing, whether we should do it or not, but merely saying that now that the government has decided to do it, on what basis do you think you should identify those units which are meant for strategic disinvestment? Dr. Chaubey?
I think I am not qualified to comment on it, because Niti Aayog can only comment on this, but I can only say that when we are going for disinvestment, we have to see the health of the company which we are divesting or going for disinvestment. Like, for example, sick units which have not been able to be revived, that is a different case. But if you are going to divest in oil and gas company, like coal, like strategic power and all that, then there is a need of some thinking, because this is giving better return to Government of India, and that is directly or indirectly consolidating the sovereign holding in terms of the financial and economic gains to the government. So there may be a need for thinking on this. But as I told that I am not qualified to comment on this, you should ask Niti Aayog for this.
Yeah, absolutely. Obviously, Niti, I will know. I was just asking you as an informed citizen, somebody who has been in GAIL. But money valuation is a very key element and probably the most controversial part of any strategic disinvestment. What are the different methods of valuation? Can you spell them out very simply and briefly for our viewers? And purely from a procedural perspective, is strategic disinvestment easier in the case of SIC PSUs since there's not much activity going on, so it's only fixed assets that have to be valued? If you remember, many of the PSUs that the government exited during the NDA years were profitable companies and their valuation always ran into controversy. So is valuation easier in the case of SIC PSUs? Mani?
It's always a very difficult task to sell a SIC PSU, primarily because unless it has something called what is called as a monetizable asset, something like land or mining licenses or spectrum, etc. But it is a politically easy call to take to sell a loss-making entity because the opposition to selling a loss-making entity is less. But whether the government will be able to get the type of money it is going to look for in, say, a strategic sale through selling only loss-making entities, we are not very sure it will get that amount. That's why I feel whatever course correction it has seen, I think there are some information available in the public domain where there is a list of 22 which is now being talked about. It includes both loss-making as well as profit-making entities, listed and unlisted. So I think that's the right way to go about, have a proper mix of entities where you will do strategic sales. If you're going to focus only on loss-making entities, I think that's going to be a very, very difficult challenge. Unless it's priced in such a way that somebody who's buying it will take it, or it could be bought by entities which are, say, something like a welfare fund or turnaround strategists. So that may not get them the price or the value that they are looking for. Or the government could even think of, say, as it is I think nursing or trying to nurse many of the SIC PSUs back to health. And I think there is a thinking that it wants to nurse them back to health and then put them under the strategic divestment rules. That's also a correct way of to go ahead.
Okay, so clearly strategic disinvestment is not an easy kettle of fish. It might be easier in the case of loss making, but certainly more difficult in the case of profitable PSU. But I'm afraid on that note, it's time for us to slip into a very short break. But please do stay with us. We'll be back very soon. Welcome back. You're watching Macros with Mythili, and we're discussing the government's professed interest now in strategic disinvestment. What are the issues? What are the challenges? With Dr. Chaubey and Mani Palvesan. Dr. Chaubey, before the break, yes, you were telling us why it is not easy for government to disinvest and why you were not even in favor of disinvesting. But fact is that despite the compelling case for strategic disinvestment, especially in the case of loss-making PSUs as Mani spoke about, the reality is that since it entails government exiting the PSU altogether, along with transfer of management control, it's almost impossible to ensure that it does not become hostage to political battles. The last such disinvestment was done more than a decade ago, but the Balco case has been seared in public memory. There was no end to the controversies over valuation, the fate of the employees, corruption and so on. So my question to you is controversy inevitable given what's at stake? Can we do anything to ensure that strategic disinvestment does not get embroiled in controversy? Dr. Chaubey?
Yeah, I will tell, if you see the Niti Aayog proposal for 74 loss-making companies, it has been a very good systematic approach, classifying 26 loss-making company one way, 5 loss-making company another way, 3, 6, 10 different type of loss-making company which could be done in different ways. So they have approached very systematically. What I wanted to tell that after examining all the options, whether there is still hope to revive them, as a public sector body will tell that we should remain public sectors. But the government has to decide on this. It would not be proper for us to comment on that.
Okay, so I was hoping that you would be able to speak a little bit more frankly now that you're no longer with GAIL, but I guess it is a little difficult since you are in SCOPE. But Mani, between the shareholder agreement that defines a relationship between the strategic partner and the government and the share purchase agreement that really covers a transaction of purchase of shares, which is more problematic to your mind? Does the fact that there are 4 key parties to the shareholder agreement, the government, strategic partner, minority shareholders in the case of listed companies, and the employees, necessarily make the shareholder agreement much more problematic? Unlike in the case of share purchaser agreement that can be reduced to cold numbers, there are some rules to go about it. Mani?
Yeah. So it could turn out to be problematic primarily because it also involves a lot of employee interests, and there could always be people who will instigate employees against these agreements. And secondly, as I said, that you will have to take the interest of the buyer. The buyer also has some interest. It's not that the government sells and the buyer just takes it. So his interest also has to be taken care of. So it's a very complex issue of to be addressed, where you have to take care of parties who have very, very differing motives for the transaction. So that's why I said it's a difficult transaction. So the merchant banker who sits in between, or the merchant, they may have even separate merchant bankers, they have to see that the interest of everybody is taken care of. This government fortunately has the benefit of hindsight of the BALCO experience or the SCB experience. They know, what I would say is find out what are the issues that are likely to crop up. They know that they can solve these or be ready for these. They should not be taken what we call by surprise. I think it's a difficult job, but since this government has taken has the political will, it has taken the decision, it has the benefit of hindsight of whatever failures happened in the earlier decade, I guess it's in a better position to maybe navigate the maze better.
Okay, so it has the political will, it has the benefit of past experience, but even so there are many imponderables and many obstacles. So Dr. Chaubey, what do you see really as a biggest stumbling block? Is it getting agreement on valuation, winning the staff over, ensuring preservation of national asset? What do you see as the biggest stumbling block in strategic disinvestment?
Stumbling block is not the question in reality. Another part which we are missing just now is the employees' concern. Do you think that employees are going to willingly accept it? This may create a long problem, and that's why what I told, that it is not going to be easy. So government has to come out and satisfy all the stakeholders who are presently there. So that is essential.
Absolutely. But Mani, yes, it's never going to be easy, and particularly after the rather unhappy experience with BALCO, Hindustan Zinc, do you really think private players will have the appetite for PSUs, especially for sick ones, at a time when they're already reluctant to make any kind of disinvestment, or any kind of investment, sorry. The residual stake sale, in fact, is yet to happen in the case of BALCO, Hindustan Zinc. So why will any private player want to put his head in the noose? Mani?
Yeah. So as I said, the government has the benefit of past experience, so I'm sure it would have learned from it. So in the case of BALCO and in the case of SCB, I think whatever issues cropped up about getting the necessary legal and regulatory approval in place, I guess this time around they will get that done alongside or at least upfront, so that they don't face these problems. The government will also have to ensure that there is a very transparent mechanism for price discovery, so that there are no fallouts later on. And most important, as Mr. Chaubey said, the government will have to somehow see that the interest of the employees are taken care of. I don't know what form, because end of the day the buyer is also there as a third party. But the employees' interest has to be taken care of by the government, and I'm sure as a government they will take care of that. Coming to whether there is an appetite for this type of stake sales, there is. It depends on the type of asset which is being put on the block. And if the company belongs to a particular sector which is seeing, let's say, seeing an upward cycle, since the economy macros are also stated or expected to improve in the coming days, I would guess that this is the right time that the government has come into with this idea, because anyway the process is slightly lengthy. By the time they really conclude the deals, I guess we'll be in a better position for these transactions to take place, and the appetite for such assets also will be there at that time.
Okay, so Mani feels this is the right time. Dr. Chaubey feels there's never a right time. Government should not disinvest. But Dr. Chaubey, we keep saying that we are living in a globalized world, etc. But how easy do you think it will be for government to sell out, make a strategic disinvestment to, say, a foreign player? Should government invite bids from everybody or turn to foreign players only when there's no domestic player coming forth? Also, now that you've retired, maybe I can ask you a question that I might have hesitated to ask you while you were in service. How critical is it really to have a minister for disinvestment? Today, DIPAM is under the finance minister, who already has so many things on its plate. In fact, people may disagree with Arun Shourie on many things, but nobody can dispute his passion when it came to disinvestment. So how important is it to have a minister solely in charge of disinvestment? Dr. Chaubey?
I do not want to comment on what Arun Sori told or anybody said. I only want to say that if you see the trend in the post-recession period, now there is a contrary view, because 20 countries have already gone for consolidation of state-owned enterprises. The sovereign holding in state-owned enterprises, which is public sector we tell, is being strengthened. On the contrary, in our country, we are going to dilute the public sectors. Outside, after recession, they are strengthening the public sector. So we still want that the government should think on consolidation of sovereign holding in public sector enterprises. So this is what we want to, but I do not want to comment on the political people and all that.
But Mani, how important is the market environment and timing? Is there ever right time in terms of market timing? Is it easier to do unlisted companies and listed companies? And how serious is really the worry about asset stripping? Should government be concerned about all these? But my main question is about timing. Is there a right time to disinvest?
See, in the stock market or any market for that way, I mean, there is never something called as a time in the market or right time. But if say the asset sale is strategically and commercially well priced, you will always find buyers at any time is right time. But the bottom line is, how is the transaction going to be priced, and what are the benefits, whether the interest of the employees and the government and the buyer, all the three is taken care of, and it is attractively priced. That's the bottom line. If it's attractively priced, you will always find a buyer. And I think, coming to that first question which you asked, Dr. Chaubey, I think as an Indian, I would prefer that you give more than level playing fields to Indian companies to buy these stakes. And yes, the idea of having a minister will be good. I think at least because this strategic sale process, it's a very, very lengthy process. I guess if you have a separate minister looking after it, the process could be slightly speeded up, I guess.
Yes, Mani, you're entirely right. There always is a price, but the question is whether that price will satisfy the public, because in the case of public sector enterprises, everybody feels that he or she must have a say. But Dr. Chaubey, unlike in the case of a stake sale in private sector companies, government invariably wants to have a say in companies where they've done a strategic disinvestment, either in respect of the staff or the sale of assets or in raising of capital. Does this become a disincentive for potential bidders, because they know government is still going to be a presence, even if their share falls to less than 51%, even if they have transferred management control? Dr. Chaubey, is that the right way of going it? Should government continue to have a presence?
If it is strategic sale of the majority share, definitely the management control shifts. But what is the harm if you examine another option, which is ESOP? You give the balanced quantity of the equity to employees and incentivize it, because public sector people are very poor people. And if you incentivize this model and give the whatever you want to disinvest to employees of the companies of the public sector and lock it for some period, that may be one of the options, because that will enhance the belongingness of the employees also, and this may prove to be a better option. Government gets the money one way or the other, employees get the belongingness, they become they work more hard and harder for the company, and all that may be there. So there is a need of deciding on a model to incentivize the ESOP and all that. Employees are the real backbone of the company.
Oh, absolutely. And there is no disputing that. And certainly this is an option that the government, I'm sure, could explore, and I hope will explore. But I'm afraid we're completely out of time here, so I'll have to end this discussion. What is clear really is that for all the talk of reform and acceptance of reform as now being part of our DNA, when it comes to strategic disinvestment, it's still an uphill task. So while the government must be commended really for returning to the fray, it's not going to be easy. As Dr. Chaubey says, there are many, many factors involved, starting from the valuation to other related aspects such as staff, asset sale, sale or residual stake. Almost every aspect has a potential to run into a political minefield. Thank you very much, Dr. Chaubey and Mani, for joining me.
Thank you.
Thank you also for watching. Remember, we'll be back next week with yet another edition of Macros with Mythili. Till then, it's thank you and goodbye from all of us at ET Now.
Find us on Facebook at facebook.com/ETNow and don't forget to click the like button. You can also follow us on Twitter at ETNowLive. To stay updated with all our programming, hit the subscribe button on our YouTube channel by logging on to youtube.com/user/ETNow.